got Mr. Schmidt over at the Fed complaining that maybe interest rate cuts aren't needed at all. It's just remarkable because the Fed is, I mean, in my opinion, so far behind. And they're still bragging about how great everything is. Everything's just totally fine. You know, the inflation is just causing too many problems for us. Like, I don't know, man. It just makes me so nervous that the Fed's gonna push us into a pooper doopers. But hey, at least it seems like, you know, we've got some stability today. We're riding right on 606 right now on the Qs, which is a great line. That's a line from our Alpha report. But we rejected 606 about 3 times here. This is within 50 cents right here. So you could call it like 2.5 rejects right here. And now we're riding on 606. Which is a remarkable line. I have a gray line here. We put this gray line here this morning, right around here, as we thought, hey, if we end up going, the down line today is 595 was our expectation. Obviously, we bounced a little bit before that, but the up line today was 606, and we nailed that. But now we're riding on it, which is great because hopefully that means we can go green again, sort of gain the lead, right? That'd be nice. And we don't want to see a continuous sell-off because then it potentially just, you know, pushes us into recession as we saw this morning. If you haven't watched the excess retirement video yet, very, very important video, so make sure you watch that. But as far as Schmid at the Fed hawking, don't love it. We're at like a 50-50 chance right now on rate cuts for December. So we're essentially a coin toss on rate cuts. And let's go jump into here. We've got, okay, so let's make some notes here. We've got currently 50% chance of rate cut. And then if we look at Schmid's commentary this morning, Schmid says, Schmid, cooling labor market, likely structural. Okay, that's somewhat of a risk factor if he wants to keep that attitude. No room to be complacent on inflation. And inflation expectations is actually what he said. Expectations. We have inflation may be much broader, he says, much broader than just tariffs. We should lean against demand growth. You know, basically continue to stay somewhat restrictive. Modestly restrictive, that's what he's calling it. Modestly restrictive. And then we should have, you know, it sounds like, well, I mean, he literally says, same rationale as October. He did not cut or did not vote for a cut in October. And then, of course, Fed could lower rate on reserves, easing repo, but otherwise they don't think that lower rates, or this guy doesn't think that lower rates won't patch job market, instead could damage inflation. So he's sort of making this argument of like, hey, like what's an extra, you know, what's it called, 25 basis points gonna do, right? That's basically his thesis here. So like, why bother basically doing an extra 25? An extra 25 is not necessarily gonna help us here. So we've got, nice little pop here on the Qs. We're literally about to gain the lead together here. This is great. Nice pop on the Qs. You've got Tesla actually goes green. Holy smokes. That's pretty remarkable. So let's get a gain the lead in there for Tesla.
Gain the lead.
Look at that dip buy right there. People buying Tesla under 400. Losing 414 wasn't great. We knew we were going to 414. After that, it gets a little more blurry. Figure Technology, 19% today. Holy smokes. Did slide a little bit for the last couple days, though. Then you've got Diz still down another, 80 bips here. I've got Target right at about 90. Wow, NVIDIA goes green as well. They were also quite red this morning. I've got Apple still green. Apple continuously around this 275 line is, to me, it continues to be this indicator that you're not seeing the non-AI technology side really selling off. And AMD is still holding nicely above 232, so this is very good, very nice and stable. Let's see if we can hold it. Excuse me. All right, so let's see here. So that was Fed Schmid. That was his yapping this morning. Then we have, let's see what the Doomers are up to this morning. We have Walmart's CEO retires. I always think it's interesting, like, as soon as things get a little interesting in markets, you get a bunch of CEO retirements. Volatility grips Wall Street. JP Morgan sees AI boom driving record bond sales. Well, we've already seen record bond sales. I think we just saw, Applied just had to sell bonds with a 10% coupon. Let me see here. I just saw this. Yeah, it was a Doomberg piece. Here it is. CoreWeave tied data center debt tests strength of flooded market. Applied Digital sold $2.35 billion of junk bonds at one of the steepest discounts of the year as the deal struggled to generate investor demand. The offering was priced 97 cents on the dollar with a yield of about 10%, according to people familiar with the matter. The transaction was met with some caution from investors amid a rush of debt offerings to fund data center construction. The deal was seen by investors as riskier than recent ones from TeraWulf and Cipher Mining. Oh, I got the Remember the Alamo mug today, by the way. Cheers to the Alamo. Oh, and Jack says hi, by the way. He wanted me to make sure I told everybody. Jack says hi. Few other junk bonds priced with similar discounts have been priced with similar discounts. So, in other words, this is a little bit rare to see this kind of sell down here. DirecTV's deal in September was also priced at 97 cents, though. And here's another one at 94.5. Update figure with final prices. Okay. Yeah, I mean, so that's somewhat interesting. When you start seeing some of these that have to list for discounts, you are getting either a combination of liquidity concerns or fears, or just default fears, that people have to be rewarded more, basically, to take the risk. This was interesting. Bitcoin bear market. Look at this. Bitcoin's bear market deepens as investors yank a bunch of money. Bitcoin fell below $95,000 for the first time in 6 months as a bout of risk aversion swept across markets. Nearly 900 million were taken out of funds. Okay, let's see here. So, crypto market remains under strain, liquidations, blah, blah, blah. Okay, here we go. Look at this. ETFs investing in Bitcoin saw the largest net outflows of 870 million. Let me see if I want to see that chart. Oh, here it is. Okay. Daily net flow. Yeah. All right. And that's the same thing. Yeah. Interesting. And if you look at the little lines over here on the right, you can see that this is similar to a sell-off we had over here in August. And then, of course, it looks like actually over here on ETFs in February. Very interesting. Second highest daily outflow, I think, ever. Right, because the Bitcoin ETFs haven't really been in existence that long. The brief rebound, equities driven by government rally faded, blah, blah, blah. Bitcoin market depth. The amount of Bitcoin trades within 1% of mid-price has shrunk. Okay, that's fine. What else here? Oh yeah, here's the NAV chart on MicroStrategy, which is interesting to look at because you could see that I actually thought it went under. Is it 1.2? It's not under 1 yet, I guess. Let me see, because I think if you go to the strategy website, they show you the NAV. Let's find out. So, this is strategy. And then MSTR strategy, MSTR. I think it's under their investor relations page. Okay, here we go. Metrics. So, they show it as Bitcoin NAV 62. Yeah, okay, no, they are at 1.2. Okay. Yeah, I actually like the stats page that they give because you can really watch the NAV net asset value. And this shows the premium that you're getting here. Now, Michael Saylor obviously argues that this premium exists because, you know, they leverage essentially. So, yeah, Michael Saylor was on CNBC this morning. I watched him there. He's talking about buying the dip. Michael Saylor's buying the dip. Doesn't he buy everything? He's just always buying. I don't know if it matters if there's a dip or not. His goal is just buy. Yeah. Yeah, and a lot of people are actually making fun of Saylor for this HODL picture because they're like, why are you in a lifeboat? Like, you should be going down with the ship. I don't know. I think people are being a little excessive on it, but, you know, whatever. There's always criticism. Okay, cool. I mean, that's how Michael Saylor, he was also in an interview with Yahoo Finance, and one of the reasons, at least he says, that he's a big fan of using pictures is because people relate to just his AI pictures better than him trying to do like a, you know, Bill Ackman style, you know, what's it called? Giant wall of text. He's like, nobody's going to read a wall of text, but if I post an image, it basically speaks for you rapidly and saves people's time. Well, that's an interesting argument. Okay, so Blue Origin, we saw they launched and landed their reusable rocket on the Ocean platform, which is pretty cool, honestly. It kind of gives you some competition to SpaceX. Then you've got, let's see here, First Brands, what is this? First Brand's off-balance sheet lender sheet bankruptcy shift. A group of First Brand creditors demanding new independent advisors for company units that issue $2.5 billion in off-balance sheet debt, claiming conflicts of interest. This is just intra-court arguing about the leftover debt. Okay. Somebody writes, I never read Bill Ackman's long messages. Yeah, look at this, guy. We made it.
Gained the lead.
Gained the lead. Dude, we smashed through 606. That was my target today, was, you know, a 5.9. My goal today in Alpha was a 5.95 bounce to 606. That was my play for today. And we got the bounce here, but boy, we're extending it now, which is great. I mean, that's good, especially compared to the pain that we've had. I mean, really now, I don't think we'll make it all the way up here. I mean, theoretically you could. And let's see, if we went up 1%, we could get to 617 actually. Because you'd be positive 1.27%-ish roughly. That would be pretty impressive of a rebound if you could make it up back over there. Did Bill Ackman dress up as a long tweet? That'd be hilarious. So you're getting a little bit of a recovery on Bitcoin as well, which is nice. Okay, let's go back to cover what else is being talked about. All right, so we have Doomers we looked at. Let's go take a peek at the journal today. Walmart CEO steps down after a decade, a couple wagers time. Quest for Children, okay, stocks. Okay, what is this? When AI hype meets AI reality, a reckoning in 6 charts. Okay, let's see it. So U.S. data center build out. Okay, so planned data center build out is this light gray here. Stalled. Underway build. Okay, so what's wrong with this chart? Huge number of data centers are in the planning stages, which means developers in the process of getting permits. Physical limits of how quickly they can be created. Some of the projects are being delayed. Yeah, we know. What's the breaking news?
President of the United States, he is calling for a Department of Justice investigation into J.P. Morgan, former President Bill Clinton, and others involved in relationships with Jeffrey Epstein. Here's what
yeah, investigate everybody related to Epstein except for me. Dude, oh my gosh. It's just hilarious. You can't help but just laugh at it at this point. But anyway, despite these challenges, the biggest tech companies are spending more than ever on AI infrastructure, right? We know that. We know CapEx is rocketing as a percentage of sales. Here, the CapEx expenditure, or the capital expenditures. Increasing shares fueled by debt. We know that. Global data center capacity by energy use. Okay. So 1 square is 1 gigawatt. Current capacity is 70. This is where we're trying to add on. Okay, got it. All right, total capacity. No, this is too insightful here. I don't see how this is a reckoning. These are projections of revenue from AI cloud products. Hopefully it keeps going like that. You know, this sort of growth here in revenues. Hopefully. Okay, all right, well, cool. Let's see what else. The Journal, 97,000 on BTCs, recovering here a little bit. A little bit of pain there overnight, huh? I think we were down like 94,000 this morning. So let's see. Companies predict 2026 will be the worst college grad market. Yeah, why every company suddenly wants to become a bank or bank-like services? What? I mean, SoFi pulled this off pretty early. 12 applications for national trust charters have been filed this year, exceeding the total for the previous 8 years. Well, probably all because of the stablecoin regulation at this point, honestly. And holding deposits, it really enables the opportunity to lend, right? So, good business to be in. Secret plan, genetically modified babies. Okay, what else? Where's our editorial board today? Usually they give us something interesting. We saw the Verizon cut. The Verizon cut of 15,000 jobs actually got upgraded to as much as 20,000 jobs, or as many as 20,000 jobs. You may already be bailing out the AI business. I wonder what this is. Okay, so Washington is treating the industry as if it's too big to fail. Markets send lukewarm signals. Huh. Okay, let's see what we have. So, we have, is the artificial intelligence bubble about to pop? The question of whether we're in for a replay of the housing collapse. But the federal government is already bailing out AI with regulatory changes and public funds that will protect companies in the event of a sector pullback. Sarah Fryer said the quiet part out loud when she told the interview that the company is looking for government backstops. That was disgusting. It still bothers me. This is a live issue as AI companies assert the need to build out vastly more chips. It's unclear if demand for AI can cover the costs, right? LYB 12 dividend. You gotta be, everything with such a high dividend should be a red flag to you. I don't even know what LYB is, but we can look at it in a bit. There were still a couple ones we wanted to look at yesterday too, I remember. What were they? Oh, I can't even remember. Oh well. Well, somebody will remind me. It's unclear if demand can cover the costs. Let's see, we know this. This is old. A little taxpayer-backed financial security could sound quite good for AI-related companies. The pressure to reform is becoming unprecedented. Despite the lukewarm signals, the U.S. government seems intent on backstopping AI no matter what. Too big to fail, baby! Too big to fail! Let's see here. Rolling out the red carpets. Washington is trying to shield AI companies from regulations. US AI bailout doesn't stop at the border. Okay, blah, 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 blah. Whatever. All right. Let's go see what else we have here. Okay. Americans, Chinese, take full advantage. Okay, that's fine. What's this? U.S. to cut tariffs on bananas, coffee, and other items. China registers worst investment decline as slowdown continues. I'll pop that up for a little later. Look at the FT in just a moment, too. Amazon and Microsoft back effort that would restrict NVIDIA chips to China. Okay. Let's see. Tech giants are running out of power. Old news. Okay, let's go pop into... Wealthy travelers are splurging on luxury hotels like never before. A good hotel is quite nice, but they are getting ridiculously expensive. Leaving mark on lodging business. Luxury rooms have defied a drop-off in foreign tourists. Affluent travelers, made wealthier in recent years by stock market rallies and real estate gains, have splurged on their stays. Wealthy traveler seems to be making its choice based on, I want this when I want it, and I'm willing to pay for it. Yeah. Average daily room rate at a luxury hotel is $394. $394 is luxury? What? I don't know that I would call that luxury. I feel like that's like upper middle, I feel like. You know? Couple $100 a night for like a standard room. $400 gets you like the upgraded stuff. You know, luxury's like $1,000+ a night, you know? And then it's crazy. You know, gets really expensive. Yeah, there it is. In Paris, a luxury room costs $1,000 a night. Yeah, exactly. And then like ultra luxury. Yeah, there you go. Ultra luxury costs $1,500 a night. Yeah. You know, and then of course you get into like the crazy stuff where it gets like $4,000 or $5,000 a night. You know, those are more like experiential usually. You get like a butler and stuff. It's crazy. But anyway, $394 is the average for luxury? That doesn't seem right. That seems that's crazy. Okay, so Oracle, let's see here. Young adults are economically dislocated. Okay, U.S. has reached a deal with Switzerland. That's fine. Reeves. Google Meter study on AI productivity. What is it? METR study on AI productivity. Let's see. Or do you mean MIT? Yeah. Oh, what is this? Oh, this is a Reddit post. Here it is. AI doesn't make devs as productive as they think. I have one free article left. Despite software engineers believing that AI helps unlock a pace in their workspace, a new study suggests that these perceptions are overblown. Okay. Despite thinking they would work 24% quicker, in reality, it took them 19% longer than without AI assistance. What? Our primary motivation in doing the study was to figure out our methods would be useful and seeing if developers would be sped up by AI. We thought we'd probably see an obvious result, speed up of, let's say, 20 or 50%. And that's not what we found. Unbelievable results. Predictably, AI boosters and skeptics have taken to the study to boost their views. So are they basically saying that, I wonder what the methods of their study were, that it actually ended up taking longer to do work? That seems kind of, it does seem a little paradoxical. Okay, here. So popular coding, before starting tasks, developers forecast that AI will allow them to reduce time by 24%. After, developers estimate that allowing AI reduced completion time by 20%. Surprisingly, we found that allowing AI actually increases completion time by 19%. AI tools slowed the developers down. Yeah, but I wonder what the result of the work is, because like, what if you got the work done better or more correctly with the aid of AI, right? But that is interesting if in this case, if it's taking longer. To understand this result, we collected evidence for 20 properties of our setting a priori that could contribute to observed slowdown effect, the size and quality. Although the influence of the experimental artifacts cannot be entirely ruled out, the robustness of the slowdown effect across our analysis suggests it's unlikely to be a primary function. I'd love to see how they did it, the methods. But I don't think I can get all the details of it, unfortunately. That is interesting. I mean, I would always be careful to put too much weight on just sort of like one idea or one paper. Oh, here it is. So if you go to, let's see, methodology, here we go. We recruit developers. Oh, good Lord. Each developer provides an issue, list of issues, data collection, effect estimation. This take quite a minute to get through. I don't think we'll go through all of this now. But what I'll do is I'll download this. This could be an interesting read later. Let's see if I can find their conclusion. I mean, we saw their abstract already. Looks like a lot of surveying here. Okay, I'll go through this later. It's interesting. Summer study. Download. You have a virus. Thank you. All right. So that is the study AI productivity. It's, I find it's going to be challenging to, like, how are you going to figure out, oh, it took you longer? I don't know. That seems a little counterintuitive. We'll have to look at that later. Anyway, what's going on over here? We got BTC dropping off of the 97. And the Qs right now, wow, okay, still holding. Look at this. We got up to 610 there. Going a little sideways at the moment here. Nice rebound today. Very good. Then let's go back. Let's go see what else we have in the FT today. So the FT, we've got Trump's betting on stable coins. He always got to make that money. Got to make that dough. Malicious, Merck, Canada, communists, government latest reversal. That's the Labour Party in the UK. AI bubble trouble talk is overblown. That's right. Tell us everything's okay. Stock market veterans often say it's impossible to tell when you're living inside of a bubble. Truly irrational behavior only becomes clear in hindsight when sanity has returned. So suddenly has talk of AI, why suddenly has talk of an AI bubble become so prevalent? Expectations are running ahead of reality. But even if valuations are stretched, doesn't mean AI investment is facing a general implosion that happens when bubbles collapse, rather than the sort of severe corrections that follow tech booms. Bubble theorists grappling with two interrelated issues. Overbuilding of data centers could leave an overhang, and then valuations. Most of the boom in data center construction lies in the future. Bubble talk really took off around the time OpenAI started disclosing long-term deals. They started disclosing a lot of long-term deals, 1.4 trillion of investments. Yeah, crazy. So far, OpenAI and NVIDIA have firmly committed to building only a tenth of the potential capacity. This is true because they're doing it at 1 gigawatt at a time. I mean, that's reasonable. I mean, of course you're going to do it one step at a time. Okay, what's their point? AI, it's too early to tell how long the revenue gap will last. Okay. So is that your counter argument, that it's just too early to tell? All of this suggests companies riding the AI boom could be vulnerable to an across-the-board retreat that in some cases would be severe, but that doesn't necessarily mean that AI has a case of bubble trouble. Bubble trouble, that's an interesting way to phrase it. Anyway, all right, what else? So reverse mortgages, we saw this. Big reads are on, let's see. End of the line. LYP is one of the largest chemical and plastic companies. Industrials. Yeah, those are always interesting plays. I mean, what you could do to see if a company is actually able to sustain their dividend is typically you want to look at the history of how long they've done their dividend, but also, like, can they afford it, right? So, like, a lot of the companies that have become dividend aristocrats, they have this reputation for continuously paying dividends. A lot of those companies, they're not going to cut their dividend because it's just going to tank the stock. But, I mean, just at first glance here, look at this already. Is this the right company? Yeah, LyondellBasell Industries. Look at this income statement. So sales, 7.7 billion, cost of sales, 6.8, operating loss, 731. Dude, they're losing money. What's going on here? Oh, they took massive goodwill impairments. Oh, okay. Oh, well, that could have tanked the stock because otherwise they'd be making money. They should be making around $2 in EPS, so they should rebound after that. But let's see what's going on with the cash flow statement. That'll be a good tell too. See, cash flow statement, they paid dividends, they issued 500 mil of debt, and they rebought stock. So they issued debt to contribute to paying their dividends. What's their balance sheet look like? Which I always get nervous by. It's like you don't have the cash to pay these dividends. You know, look at current debt, 6.8, long-term 10, 6.8 of current liabilities. I've got $6.8 billion of bills to pay. Bro, there's a money issue here, dude. You know, they barely have the money if you include inventories and accounts receivable and cash to pay their short-term bills. And then on top of that, they're supposed to pay, $1 billion in dividends as well? Let me see. What were their dividend payments? This is always the issue, and oftentimes why. Let's see here. Yeah, they paid $1.3 billion in 9 months. Okay? So that means they pay $1.6 billion in dividends. I mean, they might be forced to cut their dividend. But then again, it depends on how long they've been paying it and if they want to risk doing that, right? The stock is yielding more, or the dividend's yielding more because the stock has been tanking. How low are we here? I mean, we're at 2020 price. No, we're not. Not quite. Here, do a quick retrace on it. So if I go here to, oops, let's go here to here. And let's see what we got. I've got 95.96 and then 23.66. You know, I got this puppy. I mean, you've got a support line coming up here at 40. It's actually done really well on these retracement lines. Blew through this one, paused here, fell to this line, recovered, fell to this line again. Now it's at this line. I mean, it's actually pretty decent on the retracements. Pretty well aligned. But yeah, I mean, the dividend yield of 12%, it seems great, but what good does that do you when the stock's plummeting, right? So you'd really want to figure out, why are they writing off this goodwill? You know, what do we think their revenue growth is going to be? Are they going to get out of that hole? Could be a great rebound play if people are super nervous just about that one write-down. But then again, look at their revenues too, right? Revenues are declining here. 9-month revenues declined like 10%. You know, these revenues are down a little bit more than 10%, right? Like what, 12% or something like that year over year. So you've got some issues there. You know, there's a reason, something's going on there. I don't know what it is. I don't know enough about the company, but there's obviously something going on there. All right, what is this? Late show. Hold on a second.
And then it's going to get a lot tougher.
This one. He's proposing what his
the 50. Why are they
if you can afford that first house?
Is 78.4.
Oh, this is okay. So this is going to be like a late show demo of what it's like when you have a 50-year mortgage.
Wondering if you can afford that first house? With the Donald J. Trump 50-year mortgage, you can. And don't worry that you'll be long dead before your home is paid off, because we'll send the bills right to your grave.
Okay, all right. Yeah, you know, I don't know. People bag on the 50-year mortgage. I'm not going to watch all this. People bag on the 50-year mortgage. It's, you know, there are reasons to use the 50-year mortgage. It's just another option on the tool belt, you know. But I could see why people are frustrated, because housing affordability has been such an issue. So people get frustrated with, what, really? Like, that's how you're going to try to make housing more affordable? Anyway, I thought this was really fun too. So Bloomberg did this. Howard Lutnick's sons score record year as he denies Trump conflicts. Right. I just left the floor and told someone I'm happy to buy them a cot because they need to come in on a Sunday and not leave until Friday, joked the CEO. Right. Yeah, sure. Brandon and Kyle Lutnick, the sons of Howard Lutnick, happen to be having their best year yet. Right. I'm sure it has nothing to do with their relation to the Trump administration at all. Well, it's just a coincidence. So let's see here. Let's see. Too many kids can't read. Blame the lack of spelling tests. Oh, we showed Jack's spelling test yesterday. Many people are losing That's interesting. I actually never thought about spelling tests as being a tool for reading. I guess that makes sense. You know, the more you could recognize words, the easier it is to read, right? I never thought about it that way. I always thought spelling tests were so I could write better, but maybe it is for reading better.
This week.
Private AI evaluations cursor. Oh, okay. I tabbed away from that really fast. All right, what else we got going on? Let's see. So, let's see what the suits are saying. Suits. Oh, and how's gold doing too? That's kind of interesting. So gold right now, oil is low 60s. It's pretty stable. Gold's given back a little bit, back at 4,100. Bitcoin at 96.5. And then the Qs are still green. Still kicking butt right here. You know, nice little slight smidge of the green. Good. All right, the suits are saying, uh-oh. Traders are waiting nervously for national job numbers, which will finally be published soon. However, state-level data for the week through November 7th show unemployment claims in the U.S. ticked up sharply at the start of the month. But I wonder if that's because of the, what's it called? The shutdown. The model indicates Thursday's data would have probably shown national claims of 243,000, more than what we saw in the same week in the last 3 years since the pandemic faded. Some of the is shutdown related, therefore presumably temporary. Presumably. Oh, well, we'll see. Okay, what's this? Beginning with annualized volatility, blah, blah, blah. In 1999, as a whole, the market saw 4 different 10% drawdowns in the NASDAQ. Oh, this is interesting. Let's write down some of these. Oh, and there was another thing I wanted to write down too. This, the amount of, from the video this morning, the amount of people retired or like not working over 55, insane. So let's write this down. Jobs and data. All right, here we go. So we will say over 55. So what we saw with the over 55 was 60% of Americans over 55 aren't working, BCA research. Okay. 40% of them, research, there we go. 40% are working, and this was broken down into 40% of Americans over 55 retired and 20% never worked, leaving 40% working. Yeah, how do you never work? That's interesting. But anyway, so this NASDAQ data shows that in 1999, the NASDAQ tech index saw 4 10% declines, with 3 more in Q1 2000. Then the market finally peaked. Okay, we so far in the last 6 months, in the last 6 months, we have seen 3 NDX losses of 2% or more. We had 19 26 years ago. So in other words, we've basically been straight up. AKA, we've been straight up compared to 1999. Okay, granted there are differences in boom. However, recent developments illustrate that AI is so thirsty for cash, even highly profitable companies are starting to borrow. Rising leverage should naturally result in higher volatility. Ah, okay. Basically, okay. Bloomberg arguing higher debt could introduce higher volatility like we saw in 1999. Okay, that makes sense. It's all going into the Meet Kevin app. If you don't have the Meet Kevin app yet, make sure to download the Meet Kevin app. It's free in the Apple or Android app store. All right. So what's our world interest rate probability? Only sitting at a 48% chance of a cut right now. 48%, dropped even more. I'll throw that right here. 48% chance as of 8:17 a.m. So it's even declined even more. That's why I like to put the times and dates on here. Okay, Q's holding nicely. Tesla's up about almost up about 1%, about 80 basis points right now. It's pretty good. Figure is up pretty nicely here, 21%. Nvidia's got a whole percent in it, which is really good. Let me see here. IonQ's recovering. This was a big one that a lot of folks were looking at, and Rigotti, some of these computing quantum plays have really just sort of fallen off a cliff on the day chart here, getting a little bit of almost a dead cat bounce. Okay. Let's go back in over here. Bond market crashes the AI party. Boing. It's basically going to be talking about debt again. No problem. Okay, what about The Economist today? The Economist today tells us, we talked about that yesterday, 7 deadly sins, we talked about that, recession, we talked about that, Gaza zombie ceasefire, China's growing global fan club. More people liking China. I mean, I want to visit China. I just feel like they're going to kill me if I go to China. So I'm just not going to do anything. I'm going to sit at home. How AI is breaking cover letters and leading to lower pay. It's just everybody's using an AI cover letter, or are people just skimming them with AI? Probably both, honestly. Before AI, pity the hiring manager. Distribution of job application lengths on the freelancer.com before and after the adoption of AI. Before AI, AI generated. Yeah, whatever. Okay. Let's see here. Britain stops sharing some intelligence with the U.S. Mexico, less of a gangster's parade. TSMC's cautious expansion is frustrating the AI industry. Yeah. So this is actually one of the issues that that you have with artificial intelligence. Is you don't have enough manufacturing lines. You know, this is where NVIDIA sort of has the moat on the manufacturing right now. And that's what's frustrating a lot of folks. But the problem is, it's kind of like you have to think about these as like defense contractors. Have you ever wondered, like, why is it that we produce bombs and bullets so slowly in America? Like, why do companies like Raytheon say they have a 3-year backlog? So let's look up what their backlog is right now. Raytheon backlog. I'll just type that in. Defense contractor. They have a backlog of $251 billion. Okay, so how long is that? I don't know how long it takes them to go through that. It depends. I'd have to look at their revenue. But anyway, so yeah, and it's up from up 13% from last year. So whatever it is. The point is, it usually takes them years to get through all this. I mean, what's Raytheon's revenue? Raytheon revenue 80 billion. Yeah, all right. So that's like 2.5 to 3 years. Exactly. So why do these companies want a backlog? I think there's an easy way to visualize it. Let's do this. Let's pop open a spreadsheet. Okay. So the backlog dilemma, right? The backlog dilemma. All right. If I go, let's go with boom bust cycle for defensives. Okay. So what happens is you go in, let's say you're going to make missiles. Okay. So you're a missile creator, and this is just hypothetical. So we'll go hypothetical. Trump says, make all the bombs, okay? And then you go in there and you do, I don't know, we're going to make 10, manufacturing lines and to produce bombs. So you get 10 manufacturing lines up and running. Takes you 3 years. Takes 3 years to set them up. Okay? So now I've got 10 manufacturing lines running. It takes me 3 years to set them all up. And then you're going to get, you're going to get Biden. No, stop making bombs. Fewer bombs. Cut spending. Okay, well now all of a sudden you only need 5, let's say, right? So now only half as many needed. So now half your infrastructure is doing nothing. So half your infrastructure is sitting there doing nothing. And now you're losing money on that investment. Your ROI on those extra 5 lines goes negative because they'll depreciate as you don't use them, right? And, if you now destroy those 5 lines, you don't have them for the next president, but that's okay because those are all decaying now. Usually what happens is the inverse. You just don't build them. So instead what happens is you go in and say, Trump 2.0 comes in, make all the bombs, right? Because this is them getting burned. So they get burned. Okay? Trump 2.0 comes around, make all the bombs again. And they're like, you know what? We're only going to go to 6 manufacturing lines. Okay? Now you have a backlog for 2 years. And, that kind of keeps going. So when you get like let's just say Biden 2.0 or whatever, right? You get Biden 2.0, what happens? You still have a backlog. So you're still at, let's say, 6 lines. And then you milk the backlog. Right? It's kind of interesting if you think about it that way. So let's presume for a moment. Hold on a sec. Let's go. Let's presume for a moment that you were, prior to boom, you had 5 lines. 5 lines base. That was sort of your base. And if we do a really quick sort of look at this, let's assume backlog. Backlog, 0, 0. Over here, you've got a backlog, or over here, you have like a negative backlog because you're able to make so much. And then over here, you've got a backlog, whatever. And you grow these up to like maybe slowly, whatever. Future presidents. Future presidents. What I'm trying to do is show graphically why we have backlogs. And I think if I now plot these two into a chart, there we go, we can kind of see that green is backlog, which is good. There, get me out of the way there. And you don't want this. You don't want this like, oh, we're going to boom with manufacturing, and then you have this crash. Like, this up and down is horrible for those companies because that ends up tanking the stock. It's good in a short term, but it tanks the stock during bad times. It increases bankruptcy risk for these asset companies. So they'd rather have these smooth growth curves. So this is kind of a long-winded explanation for practically why manufacturers usually want to slow down their expansion of manufacturing lines, and they don't want to overbuild because then they end up turning into China, where you have this huge deflationary risk now. That's another thing to think of. So think about if we overbuild, overbuilding equals China. It's a risk and it's massively deflationary. And a lot of companies, they don't want that because they don't want the boom bust. And that's my assumption as to what we're going to see here in the TSM article. So let's take a look. So TSM says, the craze of AI has brought seemingly limitless demand for chips. Seemingly limitless demand, right. But that's not going to last forever. We know that. Last month, Jensen said they would have $500 billion worth of orders. OpenAI has struck deals. The frenzy has led to concerns over supply constraints. Nearly all of them are made by TSMC. They're trying to urge them to produce more. Elon Musk has mused that they need to build their own fab. Yeah, so it's getting like peak here. TSMC is obliging, but far less quickly than its customers would like. It will spend around $41 billion on CapEx this year, of which more than 2/3 is allocated to the type of cutting-edge chips. Okay, so 2/3 for the advanced, because obviously some of the money is still going to go towards regular chips that they make for like your dishwasher and laundry machine and stuff. As a share of revenue, however, TSMC's capital expenditures have fallen. Oh, that's interesting. So they're really going cautious over here as a percentage. Like they're keeping the revenue and are expected to continue doing so over the coming years, even as its customers grow noisier. Designers have little choice but to rely on TSMC. Intel has struggled to catch up. They're working on it. They've got some of the latest ASML chips, so hopefully they get there. Let's see. Taiwan, chip making, blah, blah, blah. Expanding supply is costly and slow. A top-tier fab takes around $20 billion in 3 to 4 years to complete. Building in America raises the price tag, although TSMC has pledged to build them in America. Additional capacity also poses risks. Chip industry has long been characterized by a tight supply followed by overcapacity. Yep. Because if you build out during the booms, manufacturers often expand aggressively during booms, only to be saddled with idle capacity when demand cools, which it eventually will. It'll eventually cool down. Now its capacity to produce them is underused. This was like a reference to, the pandemic. Ramped up investments to ease shortages of less advanced chips during the pandemic, like for cars or washing machines or whatever. Now those lines are underused. And it fears basically the same thing's going to happen with the AI chips. I mean, it's honestly smart for these manufacturers. It makes sense. Totally makes sense. So what do we got here? This is IonQ. That's the day chart, though. So intraday doing good. Q's still doing well. Hey, we could actually chug up towards 617 here. Look at that. Tesla is up now 2%. Last we checked, it was at 80 basis points. It's really getting a nice little rebound, sort of buy the dip crank over here. Even Oracle, I mean, they're like the definition, I feel like, of risk over here. Oracle popping off, 3% to the upside. Bitcoin now holding on to 97. Even CoreWeave's gone green. Holy smokes, they were down like 5% this morning, huh? That's crazy. That's very exciting. All right, so let's see here. Okay, so that's good on TSM. That makes sense. Then we have, we saw this. Democrats may lose again to Trump. Radical experiment. AI breaking cover letters. Boring, boring, boring. What else? Okay, I think we've gone through The Economist. New project aims to predict how quickly AI will progress. Pacific Palisades, zombie fire. Well, that's what we thought originally. Millions are turning to AI for therapy. Okay, let's go see what the information has. Information. We've got Google Anthropic tap, crypto miners for AI computing power. Yes, we already knew that. Lyft, Anthropic. Target to fund, doubles fund target to 3 billion. Okay. Blue Origin, Lands, Rocket, Real Winners, Mirati's thinking. Okay. Thinking Machines Lab in talks to raise 50 billion valuation. Wow. You leave OpenAI, you open a startup and you get a $50 billion valuation. Dude, I feel like people just sort of pull some of these valuations out of their butt. That's crazy. Brand new company. Okay, yield spreads at 53, and we've got, let's see, bonds up about 4.13, still pretty stable over here. Bitcoin just under that 97 level, gold's down now 2%, people kind of coming in to buy the dip over here. Okay, so then we've got politics. U.S. pulls back, 10 Downing Street, right to repair, blah, 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 blah. Senators distance themselves from controversial payout provision. Trump couldn't stop the electric vehicle dream. That's fine. Whatever. Inside the industry fueling America's economy. What is this, power generation? Oh, this is a sponsored post. Yeah. Okay, it's gonna be about power and fuels and that. Refining. Okay. Well, let's go listen in over here for a moment.
There's a lot going on in private markets this week. The name Cursor has been on the tip of the tongue of big names across tech, including Satya Nadella and Jensen Huang. And its vibe coding software has been on the tips of the fingers of employees at the likes of NVIDIA, Salesforce, and PwC. Now the company has roughly tripled its valuation in just a few months, raising $2.3 billion at a $29.3 billion.
This is a nice bullish rebound broadly. I'm looking at this on the cues here. You know, I thought we were going to get a 595 bounce and we were going to stop at 606 in fairness this morning. We did get 606 resistance here, right? Like this happened, but wow. I mean, we went bullish above that 606. Hopefully we hold above that 606 through the end of the day. That would be great. But yeah, this is certainly even more bullish than I thought the upside could be today. So pretty impressive. Good for the market. You know, especially I know there are a lot of people, I just see the stories of it. A lot of people getting margin called, and hopefully it's like a wake up call that if people are getting margin called, they're like, all right, like this is finally my warning sign to back off a little bit, right? So hopefully, you don't know. All right, let's go see what else we got over here. So let's pop back into other coverage. Let's go see what some of the suits are saying this morning too. So I could get to some institutional research. Let's see. But anyway, I thought we still did pretty well on the lines this morning in the Alpha Report. Remember, if you're not part of that yet, come join us. You pay once, you get lifetime access over at meetkevin.com. Okay, so now we're going to go look at institutions and the suits. We're going to see what the suits are saying. 2025, November. Let's go see November 14th. We're going to go with, let's see what TS Lombard has to say. They're talking about the UK. Yeah, the UK stock FTSE's been rebounding. Then we're going to go look at, let's see, macro weekly unemployment rate. What do we have here? Let's go look at this unemployment rate talk. Oh, well, no, that's Australia. I looked at that already. Barclays, what do they have for us? Thematic investment powers, Xiaomi Corporation, phone manufacturer, Bank of America. This is always a fun one, the Flow Show. Let's go take a look at it. The Flow Show. All right, let's go see what the flows are. Okay, so trading. So record year of flows into ETFs, investment grade bonds, 430 bill, Tech 72 bill. Second biggest inflows yet, money market funds, U.S. large cap, outflows, small caps, and real estate like REITs or home builders. Prices, well, home builders have major problems right now, in my opinion. Mass ease in financial conditions is a boom for Wall Street, but hurting Main Street. This is true. Okay. They are at a level of 6.3 on the bull-bear scale. U.S. equity inflows. Private clients are at 64.6% stocks. Man, so much. 10.3% cash, biggest weekly inflows. What's the date of this? This is November 13th. This is as of yesterday. Oh, they got the Cursor CEO.
I can't talk about things like that here.
You can talk about them here. Bloomberg Tech is the right place for it. What you've been doing is shopping yourself. Find that very interesting. You used M&A to address your own talent requirements.
This seems
growth
awkward.
by design.
The guy seems so uncomfortable.
That move, and what was the problem you were trying to solve for in doing that?
Growth by design was a talent agency that we had worked with for a long time, and the folks that were running that business, we got to know over many months, working with them on building the team. They're respected recruiting leaders in the industry, and we started talking with them a few months ago about whether they would come in-house and join us to lead talent for us. And this is a strategy that we've taken kind of across the board, whether it be in R&D, go-to-market, G&A. We look for the best people in our industry, and sometimes, conveniently or inconveniently, they're running their own companies.
What's so interesting is how fierce the talent fight has been in many ways, Michael. Talk to us about where you are getting your talent from, how you're going to see the.
I feel like they're coming off of some of the what was so awkward for him? Hold on, let me rewind. I want to see what the awkward moment was. I'm gonna rewind this puppy. I can't talk about that here part. This part. It must be like right here, because he like freaks out or something right here.
We've been really excited to see demand both across the Mag 7. 6 out of 7 of the Mag 7 actually are customers, and we're really happy about that. But then also staples of the real economy like Starbucks and PwC and Hilton and Budweiser. And then many digital natives like Stripe, Adobe, Uber, NVIDIA, Shopify, and others like that.
I'm going to jump in there, Ed, just quickly, because...
Go for it, please, yeah.
You're not answering exactly my question. Has anyone been trying to buy you?
I can't talk about things like that here.
You can talk about them here. Bloomberg Tech is the right place for it.
Okay, about a potential buyout offer. Okay, all right, well, that's fine. They're just trying to pressure him for a headline. Well, good for them. You know, don't blame them for trying to put the pressure on. That wasn't that big of a deal, though. I thought there might be something more juicy there. There wasn't anything there. That was not juice. It was not juice. No juice. We have no juice here. No juice. All right. So, what else? That's boring. That's boring. Let's go back to the flow. Ahead. Conventional wisdom into 2026 on macro. Goldilocks. Lower. What else do we have here? Okay. What's this? Here we go. Okay, perfect. Okay, so the narrative is the AI bubble boom. The government backstops are for national security reasons, and the Fed's not cutting. Taxes next year to be augmented by stimulus checks. Bubble expectations is why risk assets are struggling. Conventional wisdom on macro is still Goldilocks. Lower rates with higher profits. K-shaped recovery. AI via job losses. I mean, basically probably more of 2025, honestly. It sounds like more of the same is roughly the expectation here from Bank of America's flow show. Liquidity, CPI, PPI. This is all boring. Copper gold ratio. Yeah, this is a little odd. Or this is copper to oil. Copper to gold is odd itself too. Okay. Japanese stocks. Wow, look at this. Japanese stocks finally passed their 1989 peak. No way. You'd finally be up after how many years is that? 36 years? Holy smokes. That's wild. Steep drop in forecast global rate cuts. Right. Yeah, I think people are hearing the message loud and clear that the Fed is not interested in cutting rates too rapidly right now. I'm going to hit the restroom really quick. I'll be right back.
20 or so minutes ago is that this crowd over here that's on the side actually tried moving into this street to march their way down to the ice processing facility that's just down this road. Now, they know that they are not supposed to enter the street. They're supposed to stay in these designated protest zones. So they did that knowing that it was going to cause a confrontation with state and local police here who are doing crowd control, and that's what happened. When state police came in and told them they needed to get back into the designated protest zones, they pushed back, and that's when several individuals were arrested. We saw at least 10 or so that were taken into custody for pushing back and resisting those orders and resisting arrest. And then after things started to calm down and the riot police started to move back towards the processing facility, we saw a couple of folks out there in the crowd throwing small oranges towards law enforcement as they were here. So this is something we haven't seen here for a couple of weeks, is this size of crowd and this type of hostility with police, where they are intentionally antagonizing and engaging officers and pushing back against them in order to provoke them. And that's what we've seen for much of the last 2 months, but that has died down recently. It's a change of tone here just over the last hour, Stu.
Garrett Tenney in the middle of it. Thanks, Garrett. I'm sure we'll be hearing a lot more about this later in the day. Let's change the subject. A Navy veteran turned winemaker designed a high-end Pinot Noir in California's Santa Maria Valley. Now his business is a small family-run venture that produces a variety of wines. That winemaker is Adam Lazar, who joins me now. Okay, what makes a Navy vet go into the wine business?
Good question.
Apart from the fact that you like the alcohol in the wine, what else?
Yeah, I fell in love with wine, actually, while I was in the service up in the Bremerton, Seattle area. And when I went overseas for the last couple of years of my service, I really got into wine. I was actually there when I got out of the Gulf War. Came back to the United States and went to Fresno State University and got my degree. And ever since then, my passion and love for the product has grown.
We were talking during the commercial break, we were talking about how the wine business, there's been a decline in the consumption of wine pretty much worldwide. And you suggested that that's because American wines now dominate, the way of making wine dominates, that we're big and, I don't know what the right word is, but...
Well, I didn't think they'd get boring and start talking about wine. I was hoping I could comment on something, but there's nothing. Fine. It's gonna be boring here. Come on. All right, back. So this is say this. This is kind of wild, but 26 years it took in Japan. So let's go see here. If you invested in the Japanese TOPIX, which is kind of like the Dow, right? So the Japanese TOPIX is primary benchmark. Yeah, but it's like, unlike the Nikkei, which is more like, because that's more... I'm pretty sure the TOPIX is more similar to the Dow, but whatever. I'll just say, if you invested in the Japanese stock market 26 years ago, you'd finally be up. Dude, that's crazy. All right. So, let's keep going here. What else do we got on the flows? The flows. Biggest inflow, Korean equities. Inflows to bonds. Second biggest year ever for U.S. equities. Wow. And we're not even done yet. This is international fund flows. Annual inflows, international fund flows to U.S. equities, cumulative. So throwing money into U.S. stocks. Okay. Quilt of returns, bull bear indicator. How about, do we have a cash positioning update here? I wonder if they have cash. Let's see if they have a cash indicator. Yeah, that's at 3.8 right now. Sell when cash at or below 4%. And it's at 3.8%. So this gives us a little bit of an update on the cash reading of the B of A bear bull scale. I always think that's kind of interesting to see what their fund managers are seeing. And that international exposure to stocks is wild too. Okay. Well, international investors flowing into American stocks basically, right? Flows into stocks. Cool. So Bitcoin's back over 97. Hopefully it can hold, and then if it can hold that, maybe we'll finally be able to get back over 100. But The Economist yesterday, we'll write this down. The Economist yesterday argued international flows into U.S. stocks make the entire global economy, or put the entire global economy at risk of a stock market led sort of recession is what they argued yesterday, right? Because so many people are concentrating into U.S. stocks, and then still below 4 Still at 3.8 on below 4 for 4 weeks on fund manager cash positions. And then, of course, we saw that regarding the Japanese stock market. Okay, cool. So, what else? Let's see here. Let's go through some bookmarks here. So we talked about Applied. We talked about Michael Saylor with his boat. I'm gonna have to close the door here, little babes. Okay. Look at this. Anthony Pomp could make as much as $400 million from ProCap. Even if the stock drops 75%, could make tens of millions of dollars, says somebody here. So what is this? ProPop. Pomp's firm received 10 million shares. The current valuation of its shares is 97 million for a 4-year consulting agreement with 0 performance benchmarks. A consulting agreement? Well, they're basically just licensing his name then at that point, but that's a fantastic potential income. No target share price, no Bitcoin yield requirements, $24.5 million annually. I wonder if this is true, if we could find that. That's only the beginning. Eligible for an additional 8 million shares that could net 299 million if you hit price targets. ProCap, even if ProCap trades at $5, he's getting 50 million. So let's look at this. Unchained Crypto, a Musk-style reward from ProCap. Okay, hold on a sec. I gotta close this door. Oh boy. Oh, the little babies are running around by the door. So, Pomp built his built his online following, blah, blah, blah. Bold play into the digital asset treasury is his biggest move yet. And then it turns into another. Let me look. What is this? Pro what? I mean, there are going to be filings on this. I always get surprised when people invest in these kind of SPACs. ProCap SPAC. Bitcoin. Oh, it's another Bitcoin treasury. Wow, dude, look at this. They actually raised $750 million. Plans to hold up to $1 billion in Bitcoin to go buy Bitcoin. Well, if they've started buying, they're probably upside down, honestly. There's more $750 to go public through Columbus Circle Capital Corp. And when was this? That was in June. So did that, how's that SPAC doing right now? Columbus Circle Capital Corp 1. Is it this? Or are these the warrants? It's hard to tell. It's really hard to tell what the hell this thing is. Columbus Circle. Is it this? I can't know. Could be. It could be this. BRR. Let's find out. Bitcoin treasuries. I mean, I feel like this is like an old strategy now of people just trying to emulate. I'm just going to look this up. If there are any kind of investor relations document. ProCap. No. ProCap Bitcoin. Here we go. Investor presentation. We believe in Bitcoin as the future of finance. Yeah, so you get a fancy little slide deck or whatever. No financials at all. This is just a pitch deck, basically. I don't understand how people invest in this. But they do. Oh, there it is. Call it CCCM to take ProCap Financial public. CCCM. That's the SPAC. CCCM, at least until it... Oh, so it must have already merged. Yeah, because CCCM or whatever has already merged. Interesting. With up to $1 billion. Okay, so what is it? Cohen & Cohen Company. Let's go look. Yeah, ProCap BTC. That's what we're going to look at. Will result in ProCap Financial. That's going to be the company. being a publicly listed company. All right. Okay. Let's see. ProCap. You can't even find it. ProCap Acquisition Corp. Oh, man, this is too complicated for me. ProCap Financial. Let's just go look at some financials. Investor Relations. I don't think they have financials. But it'd be interesting if they bought any Bitcoin yet. Because that's like the latest craze right now is creating treasury companies. Whether it's Bitcoin or Ethereum. Let's see. These are all business comms. Those are all going to be like tweets and stuff. I don't really care. I just want financials. S4 maybe. Business registration statement. Here's the amended. Okay. This could give me some financials. Oh my lord. These are holdings, share structure. Oh man, this. Well, it's all going to be here. But I don't know that they have financials other than the money they're raising. That's probably why. Okay, here we go. Assets. Yeah, there it is. $1 billion in cash as of June 30th from putting this together. That's crazy. Prepaid expenses. How do you have prepaid expense? Wait. Oh no, that might just be $1 million. Yeah, because this doesn't say it's in thousands. Oh, okay. So this is not the post-merger financial set yet. No financials yet. G&A, almost $1 million in G&A. How do you pay stock-based comp out on a company that's doing nothing? I don't know. I don't know, man. Blows my mind. Whatever. Oh, people invest in it. So, okay, what else do we have out here? So, Sam Altman suggests opening. Okay, what is this clip? People keep sending me this.
They're now projecting revenues of $100 billion in 27-28, and they're projecting, revenue keeps growing at this rate of like 3x, 2x a year.
A lot in the marketplace, right? There's all kinds of incentives right now, and rightfully so, right? I mean, what do you expect an independent lab that is sort of trying to raise money to do, right? They have to put some numbers out there such that they can actually go raise money so that they can pay.
That's interesting. You basically have Satya saying, they have to throw out numbers. Because otherwise nobody's going to invest in OpenAI, so you have to throw out these ludicrous numbers, basically. Yeah, I mean, that's not a surprise.
Their bills for compute and what have you, and it's a good thing. I mean, someone's going to take some risk and put it in there, and they've shown traction. It's not like it's all risk without seeing the fact that they've been performing.
Wow, Topgolf is in talks to be sold to a private equity firm.
I mean, whether it's OpenAI, whether it's Anthropic, so I feel great about what they've done. And we have a massive book of business with these chaps. So therefore, that's all good. But overall, ultimately, there's two simple things. One is you got to allocate for R&D. The talent for AI is at a premium. You got to spend there. You got to spend on compute. That is sort of what it takes to be a leading R&D company in this world. And you have to have a balance sheet that allows you to scale that long before it's convenient.
Yeah, all right. I mean, that's fine. Somebody says they shell the shares to cover the dividend. What are you talking about? I wonder if you're talking about STRC. Man, that's not going to go well, man. I'm very nervous about STRC. I'm very bearish on STRC. I already made a warning in the Alpha report a couple weeks ago, or in the stock market course member live stream. We talked about it. StubHub. I'm in StubHub. StubHub's down 21% today. I'm gonna get rid of some of these. I don't really care about this. Delete, delete, delete. There you go. Figures up 25% in a day, bro. What the hell? Still rising on the Qs, though. Still holding on. It's good. Good, good, good. Oh, Nvidia's even up a couple percent. That's great. Yeah, go buy the dip on some of my other favorites. Ooh, let's see here. Bought the dip a little bit this morning. You can see that in the Alpha report alert. Plan to buy the dip lots more, too. Let's see here. Let's listen to what Howard Marks here is saying. People are circulating this.
Reality, in this case, for you. Reality is recognizing where things stand. And JP Morgan published a chart around the end of 24, and it was a scatter diagram showing over the years, if you bought the relationship between the S&P 500 at purchase and the return of the annualized return over the next 10 years. And it looked like this. On this axis, we had return, and on this axis, we had PE ratio.
All right, okay. So quickly, I haven't seen this yet, but this is a pretty basic argument. This is an argument that's been made many times before. The more of a premium you pay, this is logical. The more of a premium you pay, the lower your return over time. That's a very, very simple line down, okay? So the lower the PE, the closer to that X equals 0 line, right? The lower the PE, the higher your expected return. So of course you're going to get this, curve down. Super, super normal and natural. I mean, this is the same as true in real estate. If you overpay for a property by buying some overpriced new construction home, your long-term expected return is going to be lower than if you bought a really bitchin' deal, like a wedge deal, which I always, promote.
And it was a negative correlation, which means...
Somebody's asking for the Alpha Report coupon. I appreciate that. It's NVDA in honor of NVIDIA earnings coming up. NVDA is the coupon at meetkevin.com.
The higher the PE ratio you pay, the lower the return you should expect.
Yeah, duh.
Makes perfect sense.
Yeah.
And it showed there was a number here, 23, on the PE ratio axis. And it showed, which is what the PE ratio on the S&P was at the time. And it showed that historically, if you bought the S&P when the PE ratio was 23, in every case, there were no exceptions. In every case, your annualized return over the next 10 years was between 2 and -2.
Okay, that is interesting. So basically what Howard Marks is saying is because the S&P 500 has a PE ratio today that sits at like 25, you should expect likely a negative return over, the next 10 years. And that would be an annualized rate of return, right? And the reason he's saying that is because at the time JP Morgan published this document, the S&P 500 PE ratio was 23. Now it's even higher. And he says in every case, the market has returned between 2 and -2% if you buy when the S&P 500 PE ratio is 23. If we look S&P 500 PE ratio today, again, we expect it to be even higher. I mean, don't even look at like Guru Focus because I'm pretty sure they're using the trailing 12. And this depends, like it could look even worse because it's showing the S&P 500 ratio at 30, which is even worse. It's possible. It depends. Sometimes what you'll find with these charts, and it can get confusing, is that you'll actually see these charts. Yeah, okay, here we go. Go away. You can see them, you refer to a trailing 12-month versus, they're referring to a trailing 12-month versus a forward 12-month. And then you're going to get vastly different ratios on this, of course, which makes sense. But if we look over here, here's another one, PE multiples, again, trailing 12s sitting at 30, pretty high. But we've been sitting over 23, frankly, since 2023. So it's really hard on the trailing 12 to argue. I don't like using trailing because you're amplifying, current prices without considering growth that corporations are having. So I don't really see much out of that. So it really depends. Are you looking at, I wonder if I could find that JP Morgan document. That would be nice. JP Morgan, negative returns, S&P 500, 23 PE ratio. Let's see what they're actually referring to. So JP Morgan, let's see here. Here it is. Somebody posted this on LinkedIn. Okay. What do we have here? So they did this as of September, 1-year returns. Good. Okay, they're using a forward PE. Okay, good. Yeah, because that confuses a lot of people. Nobody talks about the difference between the forward and the trailing. And so basically they're saying here, yeah, this is the 2 and -2 annualized. Okay, this is the annualized right here, 2 and -2. It really concentrates down. There's no instance where your returns are elevated once you get above 23, basically. Once you get above 23, there's no case where your returns are going to be higher in history. Right? Maybe this time will be different. It's a little hard to say. I want to draw a line on that. So we'll put like a vertical line right here. In order to make sure this is vertical, I need to line it up with a line. I wish it had a snap feature. There we go. Assuming that's vertical. Yeah. So once you're to the right of the red line, you never get outsized returns. And that's where we sit right now. That's an interesting chart, actually. And if you look at the stock market performance since September 30th, first of all, I want to save that. That's going to be the JP Morgan S&P 500 PE ratio returns expected, forward PE. Put a bunch of like SEO rich things in there so I don't lose it. Okay, and then let's go look at the market since September. You know, since September 30th. Wow, dude. We're like at the same place on NVIDIA. Well, what about the market? Qs. That's actually quite interesting. We're not that much higher from where we were September 30th when they did that report. What, didn't that say 10-year, the chart? Oh, no, you're right. He did say 10-year, but it's actually, you're right. Good catch. Really good catch. You're right. The 5-year annualized returns. Yeah, he made a little oopsie-doopsie there by a factor of 2. So this would be your rate of return expected over the next 5 years, every single year. And it's an average, right? So obviously, that doesn't mean guaranteed every single year it'll be perfect. Huh. Yeah. I mean, we know things are expensive right now. I don't think anybody's surprised by that. Let's see here. What about... Oh, did y'all see this picture? This was funny. You've got Elizabeth Warren talking to Mamdani in the headquarters in New York or whatever, and the mayor headquarters now, a mayor-elect. That I thought was funny. Okay. Saw that. You know, I got a little nervous about this Robinhood chart, honestly. I didn't like this because it just shows you the amount of leverage and speculation. Like these right here are literally, these charts may as well be called debt and speculation. In fact, I'm going to save that chart. Put that on my desktop right here. And Kevin is going to label these. So we're going to call this debt and speculation. Speculation is mooning, you know, both of those. Net deposits are actually not increasing, right? Like net deposits are actually, this actually aligns with what we saw at FINRA, right? Like cash and deposits are down. We saw this at FINRA. And this is just an example that at Robinhood, it's aligning. That's actually scary. So less cash, more debt, more speculation. That's crazy. And we could see that here. with the decline in cash. We could also see that here, in flows are basically flat, right? And then we'll say that flows flat. Flows flat. Cash dropped in October. And then debt over here absolutely, dude, look at that option contract movement. 2, 6, 7. 267 divided by 219. We're up 22% increase. Are you freaking kidding me? 22% increase in options traded in October. Holy smokes, dude. And that's good for Robinhood. I don't think that's good for users. Margin up in October, 16.5 divided by 13.9. 18.7%. Holy crap. In debt on Robinhood in 1 month, dude. Holy smokes, that's speculative. Oh, did I say 6.7? No, I didn't. Oh, 2.67. No, you got me. Bro, though, what the hell? Wow. That's a lot. Yeah. All right. Save that and put that in the Meet Kevin app. This is crazy. Let's just call this. Okay. So this is Robinhood. These are Robinhood stats. And then, oops, those are forward returns from JP Morgan. All right, let me listen to this for a moment.
I think it's a sign of maybe people thinking a little bit about what are we piling into here. And we pulled back on stocks yesterday in a pretty significant way. But look, and we started the day, the Dow was down 500 points today. What is it now? It's down
140.
140. The NASDAQ's
Higher.
up 0.75%.
Yep.
I mean, so on the one hand, I like the pull back a little bit because it tells me there's some sane people thinking about valuations. There was a great piece in the Journal today, made me think of you, Dagan, on AI hype and reality, and it talked a lot about the debt buildup. That's a good piece to read if you're investing in that space to know what you're getting into. But with a market that's gone up as much as it has, it's good to see days when it pulls back a little bit. And, maybe I channel a little Charles Payne here and say that's a day if you've got a little extra cash this week, get into a name that you like. Find a name that you think maybe is a little bit undervalued. But you want signs of sanity in a market that otherwise looks pretty bubbly.
Steve Forbes, weigh in here again with us. The market is not the economy, but we spent this week talking about the wealth effect. And when I look and I see yesterday I lost X percent or X thousands of dollars, makes me a little nervous, right? Is that real, or are these truly buy the dip opportunities? Because we know stocks in the long run generally go up.
Well, I think Jackie makes a good point, and you all made a good point, is if this is just a 1 or 2 or 3 day phenomenon, no big deal. If it lasts for several weeks or for several months, it has an impact on people's confidence.
Yeah,
Another thing
that's
to keep in mind, though, about the economy is we do have two economies. We have a lot of people still living from paycheck to paycheck, still behind what they were before the Biden years, still haven't caught up yet. Another thing to come in is the uncertainty about tariffs, especially if the Supreme Court throws the tariffs out. We're going to have another era a few weeks weeks of uncertainty. And then, two, companies are beginning to realize, yes, they got a great deal on the big, beautiful bill, but there's a 15% corporate minimum tax that was enacted back in 2022 that's going to claw back billions of what they thought they were going to get. So all that has to be sorted out. And so don't be surprised you're going to get volatility in the market. And then getting back to the Fed, are they actually going to learn what their purpose is instead of trying to manipulate the economy? And that's why I think Trump is right. They should cut the rates. The Fed is right that inflation is a threat when you look at the weak dollar. So we need a whole new Fed, and I'm not sure we're going to get it short term.
Yeah, I don't think we're going to get a whole new Fed. Don't you think we should get the job reports out there fairly quickly? There was a lot of debate yesterday about will we ever see October and so forth. I think that's the data you got to get out there for the Fed to grapple with in public before their next meeting, December 10th. That's the strongest case for the rate cut is the jobs data.
Well, but that gets to the whole thing, that you fight inflation by trying to depress or stimulate the economy. Yeah. And so I don't care what the jobs, I care about the jobs report, I care about the economy, obviously, but the Federal Reserve should not be saying, oh, we better hold back. Their job is not to act like commissars in the Soviet Union.
But they do. That's how they process.
But they should be called out on it, and that's what the
That's why you come on this show.
Good, thank you. Maybe you'll raise my pay. Ha ha ha.
Oh, nice. All right. So anyway, whatever. None of that is particularly useful. I mean, I agree with him that if you have, oh, this is still going up here. We might actually make it to 617 today, dude. That's crazy. That's our next alpha line here. And, you know, we've been talking about it while we've been live the whole time here. Holding 606 was great. But wow, that's a nice rebound. Who knows if it ends up being a dead cat bounce versus, you know, the data we get. We'll see. I wonder if the BLS has released any data yet. BLS, Bureau of Labor Statistics. Revised news release dates. Oh. BLS will revise, but it may take time. Oh. Okay. Okay. Very well. So, Google, what's Target doing? Target's at $90. MP Materials got a little bit of a bounce. Hood's up, what, 3 something over here? Still almost 2% on Tesla. Very nice. Okay, let's go see now. Let's go see what else is out there. Oh yeah, let's go look at Topgolf. So I saw that they're gonna get acquired. Topgolf stock. Yeah, they're up like 7% right now. Topgolf, oh, they've actually been falling. You know, they had this surge over here post-COVID. I mean, from their post-COVID highs, they're down like 65%. Holy smokes. Interesting. Topgolf. Okay. Meme stock wipeout. Walmart's, yeah. So we know when the biggest news is Walmart's CEO leaves, it's probably not that big of a deal on the day. Okay. What else do we have here? Topgolf, China discouraged travel to Japan in retaliation, Lutnick family, cyber attacks up, Supreme Court can't mend U.S. trade policy. Let's see here. No, nothing exciting over there. Okay, let's go see if we got any other suit reports. The suit reports are always fun. Well, maybe not necessarily always fun, but sometimes they've got good stuff for us. So, let's see. The 14th. How about Citi? What does Citi have for us? Citi. Citi has an update on the U.S. consumer. Well, that could be interesting. Could look at that. Goldman has... let's go look at the update on the consumer first. Citi update on consumer. Pop this open. Concerns about the U.S. consumer. Further incremental signs are starting to appear of the weakening consumer. Oh. Data from the New York Fed, November 5th, showed that aggregate delinquency rates are elevated in Q3, record subprime auto delinquencies. Household available cash is expected to decelerate in Q4, driven by a weaker labor market, but a pickup in 2026. Well, that'll be hopeful. Okay, so they're expecting a weak consumer. So the expectation is weak consumer in Q4 and rebound 2026. I mean, that's hopeful. Equity sentiment. That's it? I guess so. All right. Well, thanks, Citi. Yeah, I'd argue this is like hopeful optimism. If we get good job numbers, there could be serious dip buy opportunities on consumer stocks. You know, think about just like the various different stocks that are out there. I mean, we don't have to go through them all right now, but I mean, there are plenty of opportunities here. This will probably be the biggest consumer stock rebound if we stick soft landing, right? But the problem is it's all predicated on sticking the soft landing. So, I mean, it could be anything from restaurants, hotels, airlines, entertainment, right? All of them are, well, I should say many of their stocks, are either at or trending towards COVID lows. So, could be an opportunity, honestly, if you soft land. And I think a lot of that is going to be predicated on, the only way you could bet on the consumer is jobs. I'm going to write that down. The only way to bet on consumer, jobs. Oh, yeah, here are some. Put some more in here. You can put, fun would be another one. Play would be another one, etc. Right? All right, that's cool. So let's save that. All right, what else we got here? Consumer stock. My notes on. Okay. Still exactly at 97 on Bitcoin. Just really getting stuck there, aren't we? And look at Hood. Hood's like right under that 127 line. Still 23% on Figure. Q stable, about 70 bips. Yeah, it's pretty sideways right now. You had a nice little buy the dip, and now it's just chill. Nice and stable. Okay. So let's go see what the news is there on the warn notices. I don't know. Let me see how many we've actually gotten. Warn tracker. All companies. Can we chart this? Charts. Charts. Really have to get out of COVID here. Yeah, and you can definitely see total warn notices certainly spiking up a little bit here. I mean, the trend has been up on these notices for a while. I don't know how useful this is. And it almost feels like a continuation of trend on the warn notices. Like, if you take out COVID, it just feels like a trend line. Oh, here. View last 12 months. Yeah, I don't think that's too particularly useful on warn notices. So that doesn't do a lot. Okay. What else? November. What else? What does Rabobank have? Shutdown ends, but data could be lost forever. Okay, I'll do this. TS Lombard talks about the UK. SocGen is talking about China. Beyond? Dude, you can't, I can't bet on Beyond long term. Beyond is a meme. But their financials suck. Revenue down, balance sheet problems. Best thing they could wish for is a meme rally so they can pump up their balance sheet. But if you look at a balance sheet or an income statement, it's not good, man. Demand decelerates further. Long road ahead for China. Yeah. Weak data shows that stimulus was behind the curve. That's not a surprise. What does Rabobank have for us? Rabobank. Political fallout. Bloody, bloody, bloody. Day ahead. When are we going to get reports? We don't know. FOMC meeting will take place the 9th to the 10th. Committee will have to rely on the November editions. Okay. Well, TBD. Yeah, and they'll give us a dot plot, I think, this next one, too. Wow. It's quite boring. Let's see. Oh, let's listen to this.
Point where then that payment might start to feel onerous because you're
the
spending.
Foreclosures are popping off on some of the new construction homes, especially in Texas and Florida.
Now isn't really where you should be because things have changed so much. And I think that's really something to think about. And it's a little bit scary to hear that people are defaulting. We're going to talk a little bit about this op-ed that was in the New York Post talking about some ways to fix the housing situation that we're in. And I like it because it's kind of got a 360 approach. You know, he discusses some of those ideas, but he also discusses this idea of a shorter mortgage, not a 50-year mortgage, a 20-year mortgage, where people pay down their debt faster, they build equity, they free up cash for later in life to do other things like send their kids to school or save more for retirement. I love this idea. What it helped me of a housing savings account where I had a specific account and I could chuck money into it and know that that is my, down payment, or, borrowing against the 401k. I think the max is around $10,000 right now. Maybe you give people incentives to do that without a penalty and you raise it. There are a lot of things that we can do to make it easier for young people to get into homes. We've just got to implement them and then have everything come together where it works.
So let me throw this at you, Steve, because I like a 20-year mortgage is great. It's still a demand side of things, right? And a 20-year mortgage is actually going to be more expensive than a 30-year monthly payment-wise, unless you get some kind of tax credit, which they talk about in this op-ed. But does that just keep juicing the side of the equation that's pushing prices up? Jackie mentioned the cost of building a home, which has gone way up. One of the obvious issues there might be tariffs on softwood lumber or aluminum.
I love
is this do we need to do so if the Trump administration is serious about
tariffs? Oh my gosh. All right. I'm bored. Take a look at this. Let's see. Let's take a look at this. This Epstein Files stuff keeps getting more and more nuts. So Donald Trump is now unleashing the Justice Department on Clinton and a bunch of other people, specifically Democrats, regarding the quote-unquote Epstein hoax. Yet literally on the front page of the Wall Street Journal, you have an analysis by the Journal on each dot is an email thread released by the House Committee. And guess whose name gets the most dots for mentions? Donald Trump. Trump is apparently in 1,670 out of 2,324 email threads. So this isn't like individual emails. Like I guess they're, you've got like over 20,000 documents that have been released now. But out of 2,324 email threads, Trump is mentioned in 1,670 of them. Trump and Epstein socialized in the 90s and 2000s when they were Palm Beach neighbors. Trump said he cut off ties with Epstein before he pled guilty to soliciting a minor for prostitution, and then said he banned Epstein from Mar-a-Lago. Of course, the counter-argument from Epstein's emails is that he never got banned from Mar-a-Lago. And instead, Jeffrey Epstein's, I guess there are more emails now here saying, presumably a victim here. We don't know who it is. Worked at Mar-a-Lago. Trump knew of it. Came to my house many times during the period. Testimony of the House. Min John at least confirmed it. Never got the message. Let's see here. I want you to realize the dog hasn't barked as Trump. Virginia spent hours at my house with him. Who, this obviously just recently happened to commit suicide, just this year. Little wild. We've covered Virginia a lot on the channel, and her testimony against what happened with the Epsteins and how she was groomed along with recruiting other younger underage girls at the mansion in Florida. But anyway, Maxwell, Epstein's former girlfriend and longtime associate, was convicted in 2021, sentenced to 20 years. We know that. Clinton mentioned too, though, doesn't go scot-free here, though mentioned 1/3 as many times as Trump. Because what do we got? Trump was mentioned 1,670 times. Clinton mentioned 512. Former President Clinton, his last name appeared in more than 500 of the files, most coming before Trump announced his presidential run in 2015. Some references also were about Hillary Clinton. Bill Clinton socialized with Epstein in the 90s and traveled on Epstein's jet. Spokesperson for the former president said these emails prove what we've been saying for a long time, that Clinton had no knowledge of Epstein's heinous crimes. Right, that's of course what each side argues. Oh, well, we didn't know that he was a scumbag. We just happened to fly on his jet and go to his island. Right. Politicians telling us they didn't know somebody was a criminal, I always think is kind of funny. So let's see here. Met your friend Bill Clinton yesterday. Later in the day, meeting your other friend Prince Andrew, and he has some questions regarding Microsoft. Wow. Okay. Prince Andrew recently lost his royalty title. Larry Summers is mentioned in 117 of these. Former Harvard president Larry Summers emailed regularly with Epstein, including banter about women and an exchange in 2019, shortly before Epstein was arrested. Summers told the Journal in 23 that he deeply regrets being in contact with Epstein. Yeah, Trump's also now sending the DOJ on JP Morgan because, JP Morgan opened like over 100 accounts for Jeffrey Epstein. Even Bank of America was implicated in opening accounts for Jeffrey Epstein and doing nothing about it. Even though JP Morgan was flagging suspicious cash withdrawals, they purposefully turned a blind eye. Now, the other thing is Florida's DOJ is also investigating JP Morgan now because of the Epstein files. And that's because Florida's like, hey, on one hand, you guys turned a blind eye to Jeffrey Epstein's bank accounts, but on the other hand, you debanked Donald Trump. Don't trust the banks. That's the lesson I always take away here. You don't hate the big banks enough. Bank of America, this is why I much prefer SoFi or Robinhood, and I don't have any stock in them, so I don't have a horse in that race, but big banks drive me nuts. Bank of America has asked a federal judge on Thursday to dismiss lawsuits accusing them of knowingly aiding Jeffrey Epstein's sex trafficking by providing banking services to the discreet financier. Proposed class action filed on October 15th by one of Jeffrey Epstein's victims, a Florida woman known as Jane Doe, so basically blank known, said the bank knowingly ignored a plethora of information about Epstein's crimes. The same thing with JP Morgan. They got caught essentially ignoring suspicious cash withdrawals, and that's why they're in the crosshairs as well. Not a surprise. But let's take a look at the rest of this here. Let's see if there are any other fun emails here. How guilty is Donald of crudity, surely, of gross ignorance, surely, of being utterly without intellect, temperament, for job, surely. This is in 2017. Larry Summers absolutely blasting Trump here. Of being over the line on family profiting, very likely. Oh, dude, we know Trump and the Trump family makes so much freaking money off of being in president, or being in the presidency. It's no surprise at this moment. There's actually the big piece right now in Bloomberg, front page of Bloomberg News, is Howard Lutnick's sons score record year. And so Howard Lutnick, obviously has been heavily involved with Donald Trump and tariffs, and you should recognize his face. We call him Mr. Slutnik or Nutlick. But there's no doubt in my mind he's giving inside information and I don't know it with certainty, it's just my opinion, but there's no doubt in my mind, in my opinion, that he's giving inside information to these suits, hedgies basically, who could go make a fortune and do billions of dollars worth of deals off the back of information that they get from inside the White House. No surprise at all to me. So that totally aligns. Gross disregard for appearances. Yep. Russians having financial leverage, less clear. Of helping Russians with the election, plausible but not certain. That's interesting. I want to see the full exchange link on that one. Oh, here's the full document. Strikes me if you work for Donald, you don't freelance. So he's guilty of whatever his campaign did. Will be some changes this week. This is just sort of in context of that email. Your world does not understand how dumb he really is. He will blame everyone around him for bad results. Donald Trump would never blame everybody else for bad results. The stock market goes down, that's Biden's stock market. The stock market goes up, this is the greatest stock market I've ever created. Like, his ability to market himself is 10 out of 10. You gotta give him that. How much you believe it is another factor. I'm trying to figure out why American elite think if you murder your baby by beating and abandonment, it must be irrelevant to your admission to Harvard, but hit on a few women in 10 years and can't work at a network or think tank. Don't repeat this insight. All right, Larry Summers. Some other emails here. Trump is so gross. My memory is a friend kill. I mean, I don't see like a major smoking gun here. I know Trump gets mentioned a lot. She knows Clinton was never on the island. She knows no sex with Stephen Hawking. No sex? Why is Stephen Hawking coming up with it? Oh my gosh. Wait, you're telling me the young girls didn't want to have sex with Stephen Hawking in the wheelchair? Man, what is going on here? Trump said he asked me to resign. I mean, Trump's getting mentioned in a lot of these emails regarding, like, it seems like reporters trying to find dirt. But, I don't know. Nothing in here is like, oh yeah, you know, Trump did, you know, this to so-and-so, like the presence or talking to. We know they're all connected. I'm a proud Democrat, but I don't give a flying flip if Bill Clinton or other Democratic officials or rich liberal were on the list. We need to identify and prosecute child abusers. I agree with that. Like, where are the smoking guns? All Republicans and Democrats should be morally outraged by the heinous crimes of these individuals. I actually think that's a great comment. It's like, if you find a smoking gun and all this stuff, prosecute the people. You know, throw them in jail. But so far, these emails are like entertaining. But where's the smoking gun? Protect our children? Totally agree. I think this is right on. Can we take a moment to think that Trump campaigned on releasing this information? And it's unclear. You know, people come to the defense for Trump here. They're like, well, he never directly answered the question as to whether or not he would release the files. I think a lot of people had the impression that he was going to stand for that transparency, right? Here somebody says he lies daily and says whatever he feels will make him look great. I mean, that's not a surprise. We already know that. And yet still no smoking gun. LOL, exactly like sham Russia hoax. I mean, that's the thing. It's like a lot of emails here. And it makes you wonder, like, did Donald Trump manage to scrub any smoking guns? But then again, a lot of the emails were provided by the Jeffrey Epstein estate. So, you know, would the estate have unscrubbed information? I don't know. Not sure what I was supposed to get out of this other than dizzy. Totally agree. That people like to talk about Trump, which in many cases includes people who hate him and are out to get him. That's true. Like the reporters or, you know, the Democratic lady who worked at the White House who's like, oh, Trump is gross. Like, it's kind of like everybody's just gossiping about Trump and that's why he's getting mentioned in these files. But he's getting all these big mentions. But where's the smoking gun? No smoking gun yet. Such a nothing burger. Trump, Bondi, Patel, Blanche summoned Lauren Boebert to the White House Situation Room to pressure her to remove his name. I mean, there was definitely a lot of cleanup of the documents. And so it makes you wonder, like, you know, how much is missing? Who knows? Waste of time. And yet you are here. Wall Street Journal. Now nothing more than a tabloid rag. Completely unserious journalism. Ouch. Big nothing burger. Dems had all these emails when Biden was in office and did not release them. Then when Trump took office, they demanded Epstein files be released. Well, actually, the Epstein estate released a lot of these emails more recently. I think it's a reach to argue that Democrats had all of this then. But again, no matter what side of the aisle you're on, whether it's the Clinton side, the Trump side, or you just don't give a flying F, I don't know that any of this is like, that there's nothing super juicy in this. We know there's sus stuff going on. The clipping of the jail cell video, merging that together, which we saw in the Adobe Premiere metadata, that's sus. We know rich people are involved with this, and there was slimy, dirty stuff going on. But and honestly, I think people are getting killed over it. Like, do I really think Virginia killed herself? Dude, I think they've been trying to take her out for years, and they finally got her. So there's definitely some deep state nonsense going on. But the stuff we're being told is benign. And then it just sort of begs the question, like, what are we not being told? Here's the Wall Street Journal editorial board on this. Could there be a better example of congressional dysfunction than the first pressing business after the government reopens? The return of the Jeffrey Epstein files. I mean, that's also kind of funny. It's like the government reopens and the first thing we do is we start talking about the Epstein files again. Everyone is obsessing about the Epstein emails. Recovering Democrats selectively leaked emails. Republicans countered by releasing thousands of other emails that are embarrassing, but for many tell us little about Epstein. Everyone knew Trump and Epstein palled around in New York in the 90s and 2000s, and they later had a falling out. Yes, we know this. Let's see what here, blah, blah, blah. New emails getting the most attention are from Maxwell. I want you to realize that the dog that hasn't barked. I mean, this is just gossip about Trump. The email's context isn't clear, nor do we know anything about who the victim is, whether it's Virginia or not. Democrats and Republicans are demanding, again, the Justice Department release all the documents for the sake of transparency. There appear to be enough votes in the House to pass a discharge commission to command the release of these files, possibly next week. The complication for transparency is that the Biden Justice Department had all of these documents for 4 years and could have released them. Oh, interesting. Yeah, I mean, the Wall Street Journal editorial board is actually doubling down on the idea that the Biden Justice Department had all of the documents, which is what one of the other commenters said. Now, my impression was some of these emails came from the Epstein estate recently. So I'm not exactly, I'm a little confused here. Did Biden have all of them? Or did some new information come from the Epstein estate? Either way, we're still not getting all the info here. Very interesting. They also could have used them to prosecute others beside Maxwell and Epstein if they thought they could get a conviction. That's the thing. Like, if there was a smoking gun, I feel like there would have been more convictions. I feel like people were very careful around what was going on here. Trump has been his own worst enemy here. As a candidate, he fanned the expectations of Epstein conspiracy theorists who think the government is protecting the rich and powerful. Pam Bondi teased explosive findings and then said there's nothing to see. Meanwhile, Trump has resorted to his usual, it's all a hoax. He looks as he has something to hide, even if he doesn't. Right. Trump looks guilty by his actions, but then when you actually look at the data or, what's coming out in the emails, it's like, well, so far this is kind of a nothing burger. Bondi should have done long ago is call a press conference, explain why they hadn't, good reasons for privacy, blah, blah, blah. Democrats wanted to keep the story going because it embarrasses Trump. And I think that's potentially a motivation for trickling these files out. But so far, this is a nothing burger. I think you guys aren't reading the room right. A conspiracy theory that was touted by President during the campaign is now being denied. Right. So, what are we missing? I can't help but as Americans feel like we're getting played. So, whatever. It's all a giant mess. Honestly, I hate to say it. I don't think we're ever going to know. And I don't know that these new probes against Clinton or otherwise, now that the Democrats are using the Epstein hoax involving Democrats, not Republicans, to try to deflect their disastrous shutdown, I will be asking Pam Bondi and the Department of Justice, together with our great patriots at the FBI, to investigate Epstein's involvement in relationship with Clinton, Larry Summers, Reid Hoffman, JP Morgan Chase, and many others, Trump announced on Truth Social. I frankly, I think we as Americans, okay, not as Democrats, not as Republicans, we as Americans are just getting played. We are getting straight up played by the idea that we're going to get transparency, and then, oh, it's the Democrats that aren't doing it. No, it's actually Republicans that aren't doing it. It's this back and forth trickle out of information, and nobody really wants to give us the truth. Instead, they're killing the people that know the truth. Scary. But, I mean, I don't think there's really anything in this. At least at this point. And I don't think we're ever going to get it. They're just going to keep hiding whatever the actual truth is. And we'll never know. All right, what else?
It's not the way to fix.
I'm afraid in New York it's going to go faster than slow because, you know, they got on board one of my favorite people.
You have in your hand my favorite story. Favorite bag, but go ahead.
Lena Khan, you remember her? Oh, look at Steve, he almost fell out of his chair. From, I guess she was the FTC head, right? And she couldn't find a business that she didn't want to sue for monopoly. So, and she lost that job, obviously. Mamdani is bringing her in. What is she, his chief of staff or something?
She's his advisor on his transition.
Yeah.
I don't know what the hell it is. But.
So she's going after, I guess she wants to go after beer and hot dogs at Yankee Stadium.
Yes.
She says they're too expensive.
All right, this is boring. Oh, boy. What else? What else? Somebody says, I'm just glad Kamala lost. Lol. Hey, man, anything but Harris. All right. What else? Nothing, dude. Nothing. Nothing. Boring. Hey, still almost 2% here. I hope we hold the 606 into the close. Hopefully we get an institutional rally into the close by the dipping and we get the 617 line. So we'll set up some more trades with the Alpha report. Bought the dip this morning, sent that trade alert out to folks in the Alpha report and the course member live stream. Actually did it together. And long-term dip buy, and as in like the buy is for the long-term, not a short-term trade. And yeah, we'll send out some more exciting info in the Alpha report we'll set up for Monday. But in the meantime here, I hope everybody enjoys their weekend. It's going to be fun. We'll get NVIDIA earnings next week, and that's all I got for now. So hopefully we get a nice close here at the end of the day. Hopefully we do not get an institutional sell-off at the end of the day. And we'll see you all in the next one, folks. Love y'all.